In this video course, we will discuss how to use the VWAP indicator for day trading. VWAP is one of the most popular indicators among day traders. It's widely used across the financial industry. Hedge funds, institutions, banks, and individual traders keep an eye on the VWAP. This is because VWAP combines the price and volume data to give us a fair value of the asset for that particular day. So if you are serious about day trading, watch the entire video without skipping anything. Here are the topics covered in this video. We will first cover the basics of the VWAP indicator. Then, we will uncover the uses of VWAP. Thirdly, we will understand how to use the VWAP for day trading. Lastly, we will discover 2 day trading setups using the VWAP indicator. These setups are very powerful, and they appear almost every day in the markets. The setups occur over all types of assets, so it doesn't matter if you trade stocks, bonds, forex, or crypto. This video is for every trader. With that being said, let's get started. Basics of VWAP. VWAP stands for Volume Weighted Average Price. In simple terms, it shows the ratio of the asset price to its total traded volume for that particular day. The VWAP can look similar to a moving average, but the fact that it uses volume in its calculation makes it even better. The VWAP starts its calculation each day from the open. Therefore, at any given time, the current VWAP is only based on the current day's price action. VWAP is such an important indicator because it gives you a fair value of the asset based on the current day's price action. This helps traders make better trade decisions. For example, if you want to buy a stock, you would like to buy it at a fair price or a discounted price. In other words, you would like to buy it near or below the VWAP. If the price is trading too high above the VWAP, you would avoid buying here. Similarly, if you want to sell a stock, you would want to sell at a fair price or a slightly expensive price. In other words, you would like to sell at the VWAP or just a little above. If the price is too low below the VWAP, you would avoid selling here. Brokers handling accounts of large clients use VWAP extensively. When a client places a trade, the quantity is often enormous. For instance, a client may say, buy 10,000 shares of XYZ Ltd. Due to the large order size, the broker can't execute it in one go. Instead, they'll buy the stock in small quantities throughout the day. If the average buy price ends up close to the VWAP, the client will be satisfied with the broker's execution and likely continue their business. However, if the average buy price is significantly above the VWAP, the client may be dissatisfied and consider taking their business elsewhere. So the VWAP is extremely important for all types of traders. Hence, it is essential that you use it for your own trading. To use the indicator, open up a chart on TradingView. Click on the indicators and type in VWAP. Click on the first one that says Volume Weighted Average Price. Once the indicator is plotted, the chart will look something like this. The blue line in the middle is the actual VWAP line. The green bands above and below the VWAP create a channel based on the VWAP. The default settings for these bands are set to 1 standard deviation. This means that the upper band is calculated by adding 1 standard deviation to the VWAP. Similarly, the lower band is calculated by subtracting 1 standard deviation from the VWAP. If we change this value from 1 to 0.5, we can see that the bands become narrow. Similarly, if we change the value to 2, the bands become wider. According to the probability distribution theory, 66% of the price action is contained within the 1 standard deviation of the VWAP, and 95% is contained within 2 standard deviations. Therefore, if we keep the multiplier at 2, we can see that whenever the price is near the upper band, it reverses downwards. Similarly, when the price is near the lower band, it reverses upwards. Uses of the VWAP. Use 1. Trend identification. The VWAP is extremely powerful when it comes to identifying the trend. If the price is currently trading above the VWAP and the VWAP is sloped upwards, then we can classify this as an uptrend. In such a situation, we should look at the price action and look for a formation of higher highs and higher lows. If that is true, then we can have confidence in being a buyer for that day. Similarly, if the price is trading below the VWAP and the VWAP is sloped downwards, then we can call it a downtrend. We can look for lower highs and lower lows to confirm the bias. If we see such a formation, we can be confident in being a seller for that day. However, this bias is only for the current day. The trend may reverse the next day. Each day is new and we need to look for bias each day. Most of the time, the price will go in one direction for some time and then reverse immediately. Therefore, it is essential to watch the price action closely. Another method to identify the market trend is by comparing the current day's VWAP to the previous day's VWAP. On any given day, the VWAP represents the price at which most buyers and sellers agree to place trades. In other words, the VWAP is the fair value of that asset for that day. If the current VWAP is above the previous day's VWAP, we can say that the fair value of the asset has gone up. This means that the price is in an uptrend. Similarly, if the current VWAP is below the previous day's VWAP, then we can say that the fair value of the asset has gone down. This means that the price is in a downtrend. When the price moves in an uptrend for a few days, you will notice that the price creates higher VWAPs for consecutive days. Similarly, in a multi-day downtrend, you will see that the price creates lower VWAPs for consecutive days. Use 2. Support and resistance. The VWAP can also act as a level of support and resistance. When the price is trading below the VWAP, it will act as a resistance. If the price comes up to the VWAP, the sellers will come in and push the price downwards. Similarly, if the price is trading above the VWAP, it will act as a support. When the price pulls back to the VWAP, buyers will come in and take the price higher. Use 3. Overbought and oversold areas. The bands above and below the VWAP can act as overbought and oversold areas on the chart. When the price comes near the upper band, we might see a pause and a reversal downwards. Similarly, if the price comes near the lower band, it might pause and reverse upwards. These bands can be extremely powerful when they coincide with support and resistance levels. When the upper band and a resistance level appear in the same area, the price will reverse downwards from up here. Similarly, if the lower band and a support level coincide with each other, then the price will reverse upwards from this area. Now, these were some fundamental uses of the VWAP indicator. If you want to use these concepts for your trading, add other confirmations like price action, candlestick patterns, or other indicators. Day trading using the VWAP. For the strategies covered in this video, we need to tweak the settings of the VWAP indicator. First, we go to the indicator's settings and change the first and second multiplier to 2 and 3. We then go to the Style section and change the colors of these bands to our liking. For now, we will keep them as orange. Once the indicator is ready, we will switch to the 5-minute time frame. Since it is a day trading strategy, our entries and exits will be on the 5-minute chart. In my experience, the 5-minute time frame is ideal for day trading. Lower time frames often introduce unnecessary market noise, while higher time frames may cause you to miss important price action. The charts from this point onwards will be the 5-minute charts only. The trades shown in this video are from the S&P 500 and some major US stocks like Tesla, Apple, and Microsoft. If you want to use these strategies, make sure you choose an asset that has good liquidity and volume. VWAP trading strategies. Strategy number 1. VWAP pullbacks. As the name suggests, the first strategy is based on entering the trend on pullbacks. A pullback is a temporary pause or a slight reversal that occurs against the trend. In a healthy trend, these pullbacks present a great opportunity to enter the existing trend. For this strategy, we want to see an existing uptrend. For an uptrend, there are two possible scenarios. Number one, the price has stayed above the VWAP from the start of the day. Number two, the price initially moved below the VWAP, but within the first 5 to 6 candles, it reversed and stayed above the VWAP. In either of these situations, we wait for the price to pull back to the VWAP. When the price comes near the VWAP, traders see this as an opportunity to buy the asset at a fair value. So, a lot of traders buy at this point and the price moves upwards. But with that being said, we cannot blindly buy here. We need to confirm our entry by adding other layers of technical analysis. Here's an example. On this chart, we have the Tesla stock on the 5-minute time frame. We see that the price opened with a big green candle. Then it quickly reversed to trade below the VWAP. At this point, the VWAP is also sloped downwards. So the trend is downwards and we will look for selling opportunities. The price then pulls back to the VWAP. The pullback was strong and it moved slightly above the VWAP as well. We notice a resistance level from the previous day that falls near the VWAP today. The price right now is trading at this resistance level. We expect the sellers to come in and push the price downwards from this point. So, we have a confluence of the resistance level and the VWAP. Now, we just wait for a strong red candle to enter a sell trade. Here is a big red candle that closes below the VWAP. We enter a sell trade at the close of this candle. We keep our stop loss above the high and target a 2:1 risk-reward ratio. As you can see here, the price reached our targets in the next few candles. Here is a buy trade. On this day, we saw that the price went down after the open. But within the first 4 candles, the price was back up above the VWAP. Then we saw a strong follow-through. At this point, the VWAP was also sloped upwards. So we decide that the price is in an uptrend and we will look for buying opportunities. The price then pulls back to the VWAP. At this point, we notice that the VWAP falls near a level of support. This level provided support to the price on the previous day. We expect the price to find support today as well. Therefore, we have a confluence of the support level and VWAP. At this price level, we expect buyers to come in with a strong force. Here, we see a bullish hammer, which is a bullish candlestick pattern. So we enter a buy trade on this candle and we keep our stop loss below the recent swing low. We target a 2:1 risk-reward ratio for this. After our entry, the price moved up, but soon enough, it reversed back downwards. During this time, we need to be patient and trust our trading strategy. Once the price created this double bottom chart pattern, we had additional confirmation that the price was ready to move up, so we stayed in the trade. The price eventually reversed and we achieved our targets on this trade as well. This is the power of confirmation. Strategy number 2, VWAP Reversals. As we discussed earlier, when the price is near the VWAP bands, it is likely that the price is overbought or oversold. In such conditions, the price will generally reverse back to the VWAP. But you need to keep a few things in mind. This strategy will only work in sideways market conditions. So, before trading such a strategy, we need to ensure that the price is in a sideways range. First of all, we will avoid trading the first hour of the day. During the first hour, the volume and volatility are extremely high. Therefore, we need to wait for the price to settle down. Once the first hour is complete, we will look at the price action so far. If the price is hugging either the upper or the lower band, then the trend can be powerful, and it will be best to avoid trading during such times. But if you see that the price was moving sideways and reversing from these bands, we can assume that the trend is weak and the price will respect the upper and lower bands. Here we saw that the price reversed downwards from the upper band twice during the first hour of the day. This shows us that the price is respecting the bands and it is a sideways day. The plan is pretty simple. Sell near the upper band, buy near the lower band, and target the VWAP. Here we saw that the price moved up and touched the upper bands. We are looking to sell here, but we are waiting for confirmation. We see that these two bearish hammer candles are here. It shows that the buyers are having difficulty in moving the prices higher. The sellers are matching the buyers with force, and a potential downside move may be in the cards. Then we see this strong red candle that closes near its lows. This signals that the sellers have taken over, and the price may move down now. So, we sell at the close of this candle and place a stop loss above the high of this candle. We target the VWAP. As you can see, the price quickly achieved our targets on this trade. The price bounced upwards from the VWAP, and soon enough, we had a selling opportunity again. This time, we noticed that the price reversed twice from this area, so we draw a resistance level here. Once the price moves near the resistance, we start to see red candles appear. The price comes very close to the upper band, forming a small doji candle. The price did not touch the upper band, but it came pretty close. This is followed by a bearish hammer candle. At this point, we can say that the sellers have come in and they are pushing the prices downwards. Next, the price breaks below the resistance with this strong red candle. We enter a short trade at the close of this candle, and we keep our stop loss above the resistance level. We place our targets at the VWAP. As you can see, the price achieved our targets on this trade as well. Here is a buy setup using the same logic. Here we see that the price opened on this candle. We avoid trading in the first hour of the session. By the end of the first hour, we notice that the price has reversed twice within that day itself. It indicates that the price is going to stay sideways for the entire day. The price then went ahead and touched the upper band. It created two red candles, but these were not valid trade setups. The close of this candle is in the middle and it is extremely small compared to the previous candle, so we refrain from selling here. This candle had a strong close near its lows, but it is extremely small in the broader context, so we avoid selling here as well. However, this candle has a strong close and it also has a large body, so this was a valid sell setup. The price moves down and breaks below the VWAP. It goes down and touches the lower band as well. At this point, we expect an upward reversal, but we are looking for confirmation. We realize that previously, on the same day, the price reversed upwards from this area. So, it is a support level that coincides with the lower band. Once the price reaches here, we can expect the buyers to come in and take the price upwards. As the price comes near this area, the down move slows down as we see these small body red candles. Then, we see this strong green candle with a big body and a strong close. So, we enter a buy trade at the close of this candle. We keep our stop loss below the candle and we place our targets at the VWAP. In this trade example, you can see that the risk-reward ratio is barely 1:1, and that is totally fine. Since these strategies have a high win rate, you can take trades where the risk and reward are equal at a minimum. However, as always, you should avoid taking trades with a large risk and a small reward. That brings us to the end of this video. If you find value in this video, then be sure to hit that like button and subscribe to our channel so that you never miss any of our new videos. See you soon!